Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hope all of you have had a very beautiful weekend so far. Now, in terms of what we're going to cover in today's video, number one, we are going to set the tone for the week. Take a look at some of the economic data points that are being released this week that could impact the markets either up or down. So we're going to give a little bit of context as to which direction the market could head over the course of the week. Number two, we're going to be going over some of the strategy rules for all of the options that I'll be presenting to you guys, because all of these options plays are going to be for selling options, not buying options, more specifically selling put options as part of the larger wheel strategy that I like to run on the channel. And then number three, of course, guys, we are going to go over the juicy top 5 options plays for the week. And I do have a lot of bonus plays prepared for you guys as well. So a lot to cover in today's video, guys. Let us jump right into it. So in terms of the expectations for the week, guys, first in terms of the technicals, guys, right? So we know that over the last 4 weeks, the markets have been rallying very nicely. The S&P 500 on the screen right here, putting in new all-time highs, but the QQQs, not so much. That being said, though, we got to be careful because we are shaping into a little bit of bearish divergence. That is when you have higher highs on the market, but the RSI is pointing to lower lows. All that means, guys, is that the bulls are possibly getting a little bit tired, right? And what could we be expecting if we get a pullback? Well, we're just expecting a weekly higher low for possible further trend continuation. So any pullbacks at this current time, in my opinion, are still going to be for buying opportunities, but we have to be mindful of the fact that these markets can indeed pull back. The bulls are in control of the shorter time frames, such as the daily, but in the event that they roll them over the course of this week, we would not be surprised if we're looking for those higher lows for the eventual continuation of the weekly uptrend, possibly in mid-October. So this week could be a little bit volatile for those reasons, and these economic data points could potentially help to bring down the markets a little bit for some healthy technical consolidation. Take a look at what we have on the menu for the week, guys. Tomorrow, Jerome Powell speaking at an economic conference. We're not really expecting too much out of this speech. I don't think he's really going to change anything from what he's been saying over the past 2 weeks, but still a little bit of a market event in the event that he has a slip up, right? Something that he hasn't said, or maybe a change of tone. So we'll keep an eye on that, but I don't think it's going to be a market moving event. Now, the rest probably are, guys. On Tuesday, we get the ISM manufacturing report. This is an economic data point that matters a lot. It measures economic output, and you guys know exactly what's happened over the past 2 months. Every single time we've got a less than favorable manufacturing report that's come out, the S&P has usually always dropped about 1% on that day, because we know we're in an environment right now, guys, where there's a battle of narratives, right? Is it a hard landing recession on the table? Is it a soft landing recession? Is there no recession at all? You really have a push and pull of all those narratives together. So any weak economic data obviously goes to fuel the narrative that we are potentially already in a recession or going into a small recession. So keep an eye on ISM manufacturing, guys. This is definitely going to be one of the larger market moving events. And then it continues with jobs data. So again, right now, guys, inflation's no longer a problem. Everybody's focused on economic output and jobs data. So obviously we have a few jobs data reports this week. ADP employment, which measures private employment on the Wednesday session. If this comes in far below the expectation, watch out. The markets probably will not like that at all. Then on Thursday, we have some ISM services PMI. This measures inflation in the services industry. I don't think that it's going to be a market moving event, but the one from the following day, guys, this is the big one, the non-farm payrolls. I'll remind you, the non-farm payrolls 2 months ago in August, that was the catalyst that sent the markets into a rapid spiral to the downside, bringing the SPY down over 10% and bringing the QQQs down over 15%. So keep an eye on your non-farm payrolls, guys. I would try and wind down most of your trades if you are trading prior to the Friday session, because if this one comes in substantially below the expectation, watch out. The markets are not going to like that one as well. So that's a bit of what we're looking at for the week here, guys. So possibly expecting a pullback, which means that the positioning in terms of this week for myself what I'll be looking to do, guys, is I'll be looking for companies that are dropping, coming into large areas of support. The last thing I want to do coming into this week, guys, knowing that the bulls are possibly a little bit tired at the all-time highs right now, and with all this economic data coming out, the last thing I want to do is chase things at the all-time high. I would rather wait for some things that are pulling back into large areas of support and write my put options there. So hopefully that makes sense. Now, in terms of the strategy rules, guys, we're going to go over these very, very briefly because I have a 30-minute video on the channel, guys. I'll link it top right corner of the video right now and down below in the description for a full detailed explanation of the strategy for the put wheel as to how to sell puts. How do I choose which companies I want? How do I choose which strike prices I want? How do I choose the exact levels that I want as well? So I'll leave that down below, guys. It's a 30-minute video that goes a lot more in detail than I'm going to go into right now. But short form explanation, guys, this is the strategy to run the put wheel. What is the put wheel exactly? Well, I'm glad you asked, guys. It is a strategy that entails selling puts below the current market and generating premium and putting that premium in your pocket. And in the event we get assigned the shares, we are then going to be writing covered calls. You can think of selling puts, guys, as a buy limit order that pays you. It's very, very, very simple to understand, right? So let's say I wanted to buy 100 shares of Google, right? Well, there's two ways that I can do that. If I want to go into Google and buy 100 shares, let's say I want to buy 100 shares down here at the $160 level, right? Well, there's two ways I can do it. Number one, I can just put a buy limit order for 100 shares there. But if the market just runs away, well, then I don't get filled, I don't get any shares, and I don't make any money at all. That is where we can sell some put options. Selling put options, especially on a weekly basis, is a great way to generate income, whether or not the stock actually comes below that price or does not even come into it at all. Let me explain a little bit further. Here you can see we have the Google options chain for the week. The 160 puts are paying us if we sell these to open, guys. We're not buying these puts. This is going to be a sell to open trade, right? They're paying us about $66 for the pretty much a buy limit order here at 160, meaning if the stock price ends below 160 on the Friday close, we will have to buy 100 shares of Google at 160 like we wanted to anyways, and in the process, we will collect 66 cents per share. So it's a good way of reducing our average cost by getting into a position selling puts, right? However, if the stock does not go below 160 by the Friday close and just maintains above or goes higher, we simply just get to collect all of that $66, put it in our pocket, and we don't have to buy any shares, which is why I say it is a buy limit order that pays you whether or not it ends up getting filled by the Friday close. So hopefully that makes sense. Now, in terms of the strategy rules, how do I choose what to write and where to write? Well, glad you guys asked. Rule number one, guys, always write puts on a solid company, right? You wouldn't put a buy limit order on a stock that you don't want. So don't do the same thing when you're writing short puts. Always write puts on a company that you want to own at the strike price that you want to own it. This is for a very simple reason, guys. There is a risk of being assigned the shares, a risk of possibly having to buy those 100 shares. And if you're buying 100 shares of a company that you don't like, and also if you're buying it at a level you don't like, well, managing the trade is going to be a little bit difficult emotionally and mentally, right? You won't have any high conviction. So solid companies, high conviction companies only for you guys. You want to own these shares potentially at that level. Number two, we're going to be looking for stocks in a monthly uptrend or a long-term range. This just betters our probabilities, guys, that the bulls, if we're writing puts at support levels and we get a sign, there's a good chance that the bulls act as defense for us, act as support, and push the markets higher. So that's why we always go in the direction of the trend, or at least in a long-term range. Number three, the company needs not to have any earnings this week. We know that earnings is a very volatile event, guys. Companies can go up or down 10, 15, 20%. We've seen it so many times over the last 6 months. So if you want to be very safe and run this strategy in the most conservative way possible and not end up with any nasty surprises in terms of big losses, just do not ever write any put options on companies that have earnings this week. Number four, we want to be targeting stocks that are in the area of support or a breakout retest. Let me bring up the chart of Autodesk, which is kind of the poster child of that point right there. So you can see down here, guys, on Autodesk, look at this beautiful range of support, right? So we want to be writing puts in a very large area of support. Number one, because it betters our probabilities of not being assigned. The bulls are going to play some defense for us. Now, in terms of the breakout retest is another high probability trade. You can see this is that same range, and eventually we break out of the range, retest the top end of the range right here. This is the retest location. We write the put options there, and usually we get the rally, right? So breakout, retest, and run. Usually this trade setup is a very high probability trade. So all the trades that I show on the channel, guys, will be one of those two setups, the support or the breakout retest. Now, in terms of what we're looking for here, guys, for writing at or lower than the expected move and writing on a red or flat day, these 2 points go hand in hand. And my apologies, for some which reason I don't, oh, actually I do have the website up, my bad. So if you guys don't know what the expected move of a stock is in a given week, guys, very simply, it's the probability that Wall Street attributes to how much it can go up or down in a given week. Here we have Google. If you don't know what the expected move is, guys, you can go on optionsai.com. It's a free website. Just type it into Google, Options AI expected move, and you'll land on this very same page, and you can look up whichever company you want. As you can see, the expected move for Google is about 2.3% for the week. So we want to be targeting the lower end of the expected move to the downside. The logic is as follows, guys. Usually when we have large moves to the downside that come into the expected move or beyond, we're bound to get a little bit of mean reversion through the week and push the price back within the bounds of the expected move. So as long as we're targeting put up strikes that are below the expected move, we improve our odds substantially of not being assigned, guys. And then obviously, the next point, writing on a red or flat day. You'll never see me write any put options, guys, on stocks that are green. We're not in the business of chasing these prices higher. We want to be waiting for dips to come into us. More specifically, if we're writing on a red day and the stock is coming down, down, down into our expected move, then we can write strike prices even below, way further below the expected move, guys, which once again improves our odds of not being assigned the stock. Now, before last point right here, we want to be targeting premiums between 0.5% and 0.75%. That is your ROI. Now, this after 5-6 years of running the strategy, guys, this is pretty much the sweet spot that I found. It's a very good trade-off between good ROI and a very low risk of assignment. Usually if we're targeting 0.5% in terms of the ROI for the put options right here, that means that we're probably going to have a 90 to 95% win rate on all of our trades, and we're still making good money, guys. If you're making 0.5% every single week for the entire year, that's 26% annualized. That's roughly 2 times the S&P performance on a longer duration basis, right? Nobody will ever complain about making 26% per year with a very conservative strategy such as this. If you don't know what I mean by the 0.5% rule, guys, very, very simply, it's the premium you're looking for right here on the bid. So if you want to know what the 0.5% rule is, just divide the strike price by 2, and you're looking for that in cent increments right here. I'll give you a mathematical example, right? Let's say we wanted to buy those shares of Google by selling these put options down here. So we would need to at least say 80 cents. I just did it in my head, right? As I said, divide 160 by 2, and you need to see that in cent increments on the bid right here for the 0.5% rule. The reason I give you guys the mental math way of doing it is so you can go through a lot of these options chains on Monday or Tuesday morning very, very, very quickly and not have to manually calculate it every single time, right? The math is as follows. Look at this. 0.8, which is 80 cents, divided by your 160 strike, that is literally 0.5%. So very easy mental math way. As you can see, at the 160 mark right now, there is not enough premium for Google, so we would need to see a little bit higher for this trade to be worth it for us. Hopefully that makes sense. And then in the event we ever get assigned the shares, guys, if we have to buy the shares because we get assigned on these put contracts, well, we're going to be writing covered calls. So selling puts is a buy limit to get into a stock potentially. Selling the covered calls is how we then get out of the stock. It is a sell limit order at the market or above the market, right? For covered calls, very simply, we want to be targeting between 0.5% and 1% in weekly premium. Same logic as this, just on the covered call side of things, the other side of the chain right here. And then we're going to be writing at the assigned strike price or 1 strike higher. Let's say I get assigned Google on next Friday, right? Let's say I write the 160s, for example, and I end up buying the shares right here at 160. The following week, I'll be writing the $160 covered calls to even further reduce my cost basis. And if Google rallies higher than 160 by the next Friday after that, we just get in and out of the position easy as can be. Now, in the event that Google, for some reason, on the following Monday, gaps up way higher. Let's say we get a sign at 160 on Friday, and then on the Monday morning when we find this stock, right, it's 163, 164 already on Monday. That is the only time, guys, that I will possibly be writing one strike higher. I may go with the 162.5 strike, something like that, just to pocket a little bit more of those gains. So hopefully all that makes sense, guys. That's really a very simple rundown of the strategy right now. Now let's get into the good stuff. So let's get into the top 5 options play, shall we? And number 1 is going to be one that we just talked about, literally, right? It is going to be Google. The reason that I like Google, guys, is number 1, because of the valuation. The valuation is extremely cheap, the cheapest of the entire Mag 7 stocks right now. And I do like this lower area with the 200 moving average down here. What is Google trying to do right now? Weekly downtrend, nice move to the upside, guys, and they'll eventually be trying to reset into a new weekly uptrend and attack this 170, 180 area of resistance. So any dips right now, in my humble opinion, are decent buying opportunities. So in the event Google comes down over the course of the week, this is where I want to be picking it up, guys, about 160. So I'm sorry I did not put the expected move on the chart, but you can see right here, the expected move is 161.46. So let's put a line right there. That's roughly the expected move. We know that we want to be at or around the 160 mark, which is below the expected move and close to the 160 and close to the 200 daily moving average as well, right? So let's have a look on the options chain. And as we can see, the 160 are not paying enough premium. The 162.5s are too high, guys. They're above the expected move and they're too close to the current share price. We don't want those. We want the 160s. So what we will need to do is wait for the premium to be freed up on this one. I'll be looking for at least 80 cents on the bid right here. And if for every which reason, guys, Google has a very bad Monday or Tuesday, and you can find it maybe already at the 161, 160 Monday and Tuesday, that may even free up the 157.5s. So keep an eye on these two strikes right here for selling those put options. You will need to see around 80 cents on the bid for each of those for it to make sense for your trade. So hopefully that is helpful for Google. Stock number 2 that we're going to be looking at is Square. And before we do that, give me a very brief second. All right, so we're going to take a look at Square. This one has been recurring on the channel for a few weeks running at this point, just because it's in such a juicy area, guys. This area of support right here, 63, let's call it, all the way down to roughly 53, is a juicy area. It's been support for the stock pretty much for the last 2 years, 2+ years at this point. And the valuation of this company is extremely cheap. The company is now net profitable, no problem with that. And the company is growing substantially into the future as well. Very nice expansion of EPS and very nice expansion of revenue. So no problems with the company as well. It just has not been getting much love, which means that it's a tremendous buying opportunity. The market is not appreciating the fact that this one is so undervalued, but I do, which is why I want to buy it down here, guys. So we'll be looking to write some put options on Square. Let's go have a look at the expected move for Square real quick, and I'll pull it up and put it on the chart for you guys. So pulling up Square, you can see the expected move for Square is about 4.1%, to the downside 64.24. So let us put a nice little line at 64.24, roughly right around there. And as you can see, it is just about into our support area. I like that zone, guys. 64, 63, 62. I am a buyer. So let's have a look at some of the options chain on Square and see, can we find any premium below the 64.25? Let's have a look. As we can see right here, guys, 64s are paying 46 cents. Even the $63 puts are paying 33 cents. That represents our 0.5% rule, guys. Half of 64 is 32, so you need to see a minimum of 32 cents on the bid right here. We got it. And we even have some on the 63s. The art of this strategy, guys, is trying to go as low as we can below this expected move right here while still getting our 0.5%. It increases the probability of wins for this strategy by a substantial amount here, guys. So these are some of the options that I may be wanting to write. The best case scenario is if Square dips a little bit Monday or Tuesday down into 65, even maybe high 64s, that's going to free up even lower strikes, guys. Maybe even the 62s, the 61s, or the 60s. We want as low as we can possibly get in terms of strikes while still getting 0.5% in premium. So hopefully that makes sense. That's trade number 2 for Square. Trade number 3 is going to be a pair of semiconductor trades, and the first one is going to be AMD. So AMD has done something very remarkable lately in breaking out of this very, very, very large resistance area. This area has been very tough for this stock, guys, essentially since January. It was support back here, so resistance here, support back here again, resistance. So you guys know this is a very important zone. And now we have broken out from it to the upside, and we're well above all of the moving averages too. AMD has got the new weekly uptrend in motion, and any move to the downside, guys, in my opinion, going to be a buying opportunity for potentially continuation of those longs. So that being said, I would love to target slightly below. Since we know this area now is going to be support because we're pulling back into it, right? We want to be as low as possible, maybe around these moving averages, targeting about 155, 152, right? With the stock at 154 right now. So let's have a look at the expected move on AMD and see what we can get in terms of the premium as well. So I want to do all this with you guys, just so you know how I'm doing it, right? The expected move on AMD, 157.62. So let's put a little 157, let's put a 157.67 right there. As you can see, it's right there. So we want to be below that, towards the lower end of support, 155, 152. Let's go shopping for some premium and see if we can find any good options contracts below that expected move of 157.64. So let's move down here. And as we can see, guys, right? The 155s are literally paying roughly 0.5%, right? Not quite, I'll agree with you. 77 cents would be roughly 0.5% right here. If you don't know how I'm doing that in my head, real quick, just 155 divided by 2, right? 77 cents divided by your 155, that's roughly your 0.5% rule. So not quite, but very close. I would still not mind doing it, guys. It is very, very, very close to the required premium, and it is below the expected move in the area that I want. However, if AMD has continuation of a red day on Monday and Tuesday, coming down into the 162, 161, 160, what's that going to do, guys? It's going to free up even lower strikes. Think the 152.5s or maybe even the 150s, depending on the size of a possible drop, right? So these are my preferred 3 strikes. Depending on the size of a pullback early on in the week, I'll be looking for either the 155, 152.50, or the 150s, as low as we can get while still getting roughly 75 cents, right? So hopefully that makes sense for AMD. And the second of these semiconductor trades that I'm going to be looking at is ON Semiconductor. I love this one, guys. You've seen me play it a ton on the channel in the past 6, 7, 8 months of trading. Every single time it dips back down, $70 to about $65. I love it. Huge, huge, huge area of support for the stock. The 200 weekly moving average is also sitting there too. And as you can see, every time we've come into it since June, it usually just flickers around right here and then has a nice pop. So we'll be looking to play this area again if they give us an opportunity. If ON Semiconductor dips down a little bit on the Monday or Tuesday session, we could get some maybe options to right down here in the lower or higher 60s rather. So let's have a look at the expected move first. We'll put that on the chart. And thereafter, oops, is it working? Yes, it is working. Perfect. So ON Semiconductor, 70.76 is the expected move. So let us put a little bit of a line right there, 70.76. And now we're going to go shopping for some of that premium, right? Can we find anything lower than $71? Let's have a look. So the contracts for ON, as we can see, the minimum required is about 35 cents, right? Half of 70 is 35. On $70, we have enough premium. And even on the 69s, guys, we have enough premium too. So as of right now, these 2 strikes do represent some good trades for me right now. However, in the event we dip a little bit on Monday or Tuesday, well, that might even free up even better strikes, such as 68, 67, and possibly even lower. The beauty of this strategy, guys, is to be able to be dynamic with your strike prices, right? We know what area of support we are targeting. Now, depending on the size of the move to the downside, we may be able to get lower and lower and lower into that zone, which once again improves our odds of not being assigned. And if we do get assigned, we're getting an even better price, right? So AMD and ON Semiconductor are my 2 plays for semis over the course of this week. Now, stock number 4 is going to be a very easy one just because of how cheap it is. So everybody with small accounts, guys, I do have you guys in mind as well. I know that not everybody can be writing put options on companies that are, $15,000, $20,000 for 100 shares, right? So sometimes you need to be making some plays on some cheaper stocks too. And SoFi does fill that criteria. The fundamentals of this company, guys, no problem at all. The fundamentals are very, very good. We have decent net margin profit expansion, right? So finally, net margin profitable right now. And we do have very, very good EPS growth over the next 4 years and very nice revenue growth as well. It's just this company is not doing much of anything, right? It's kind of stagnating just like Square, which is why I like it. Every time we can find it, $7.50 down to $7. I love writing puts on SoFi. Usually it's a very easy stock to run this strategy on. So let's go have a look at the expected move on SoFi right now. As I said, the levels that I like are really between the 750, where the moving averages are right now, and the $7 mark, which is this big green box, guys. I've written a ton of options on SoFi on the channel publicly, and we have literally won every single one of those trades since we've been playing them since last year, essentially, right? So moving on to SoFi. Sometimes we get a sign, but then we can always usually write covered calls and be out within a few couple weeks for some very good premium, right? So the expected move on SoFi is 7.59. So let's put the line right there. I already have a line right there. Nice. So let's just change it a little bit. 759. So that's going to be what we're looking for, guys. 2 strikes in mind right here for SoFi, the 750s or the $7. Now, I know this stock like the back of my hand. There's probably not much premium at all at the $7 mark right now, but let's just pull it up just to show you guys what I mean. That's not SoFi. This is SoFi. All right, SoFi Technologies. So SoFi real quick, as you can see right here, October 4th, 750 is only paying about 5 cents. But this one is cheap, guys. 5 cents does represent over 0.5%, right? So if you divide, let's say 0.05 divided by 7.5, you can see it is over the 0.5% rule. It's actually closer to 0.66%. So I would not mind taking this trade at all, guys. Even at the $750 mark, it is slightly below the expected move, right in line with the area of support. And at worst case scenario, if we get assigned some shares, we can always average down at the $7 level, which is a much more sturdy area of support. But I like this one because we have the weekly breakout underway, possibly on SoFi, right? So 750 is going to be my preferred strike for the week. But if for some which reason SoFi moves crazy on Monday or Tuesday, right, and blasts past this expected move, comes down into 730, 720, right? That's going to free up the $7 strike, which is not on the screen right now because it's probably worthless as a whole, but there will be some premium there if we really smash through those levels aggressively, right? So that's the trade on SoFi. Hopefully that makes sense. And I also have another cheap one for you guys right now, which is going to be New Holdings. If you guys don't know, this is pretty much the fastest growing fintech and bank in Latin America right now. It is one that Warren Buffett has been invested in for quite some time, essentially since the IPO. And it is just a monster in terms of performance, guys. Beautiful net margins right here. And look at this expansion. Gorgeous EPS expansion over the next 4 years and gorgeous revenue expansion as well. This one is growing like an absolute machine, destroying legacy banks in Latin America, guys. They're pretty much the first online bank that is really making waves down there. And as you can see, the chart is such a glorious uptrend on the weekly, but also on the monthly time frame as well. And it's nice. It's a nice uptrend because as well, it's not too overextended in terms of the RSI levels either. Now, what we're looking for here, guys, is the infamous breakout and retest of a prior level, right? This was the prior all-time high. We're retesting it now, and we're retesting the 12 EMA. And you can see how well we've held this 12 EMA for the most part since we started this rally last April of 2023. So I like this one a lot, guys. I'm full disclaimer, I'm already in this one, but I would even consider adding a bit more at these levels. So let's have a look right here in terms of the expectations for New Holdings. So let's pull it up. And the expected move for the week is about 13.28 to the downside, 4.3%. So let's put that on the chart right here, 13.28. Let me just put a line right there. And as you can see, we will need to be shopping a little bit lower than that. The weekly chart paints the best picture for this one, guys. It's just a massively beautiful level right here. Even at the 13s, wouldn't be opposed, guys, because I do think this one will have no problem in just continuing the nice monthly uptrend. We're trying to set the monthly higher lows right now, as a matter of fact, to potentially rally for some continuation. So let's have a look at some New Holdings. Put options here, very cheap stock as well, and very solid company, right? I don't mind playing cheap stocks, but as long as they're very high quality companies. So let's have a look right here. As we can see, $13 is not paying much at 5 cents. 1350s are paying well over 1%. 1% would be 13.5 cents right here. They're now paying 16. So essentially we need to have new drop a little bit for us, right? We see this big red candle on Thursday, Friday, not much. But if Monday morning we get some continuation here, guys, down below 1350 into maybe 1340, 1330, that is probably going to free up the $13 strike. Once again, you'll probably be looking for anywhere between 7 and 10 cents for this trade to make sense for you. And if we get assigned some shares, guys, we're going to have a very nice momentum rally probably in the forthcoming weeks for this stock just to continue its powerhouse of a move to the upside, right? So this one is very good. I would not mind being assigned. And even if it takes us longer, right? As you can see, it's been settling here for about 4, 5, 6 weeks at this point. Even if it just consolidates into a bit of a tightening range, I wouldn't be opposed to that either, guys. Great company. I wouldn't mind sitting on some shares. And the shares, for the most part, are cheap. For 100 shares, it's only about $1,300, right? If we're writing the $13 strikes. So very decent company, very good price. I am all for it. And that was the top 5 options plays for this week. Hopefully you guys enjoyed that. In terms of the bonus plays that I'll be looking for, I won't be going through every options chain, but just to give you an idea, what we're looking for. Trade number 1, bonus trades, is going to be Elf Beauty, coming into a big last area of defense right here, 108 down to about 95. I like them closer to 100. So if you ever see a big dip on Monday or Tuesday on Elf Beauty coming down into maybe the 107, 106 type of area, we can maybe find some short put plays for lower than $100. Think 98, 97, 95, all the way down to this previous weekly support. This one is from last October, and this green line right here, what is that? That is the 200 weekly moving average, guys. Usually a very, very, very solid area. Elf has been crushed, in my opinion, unjustly, so I would not mind playing this company down there. I think the valuation down there is very, very, very reasonable for the company under $100. Play number 2 is another play that's gotten crushed recently, but is coming into fair value in my opinion, and that is CELH. CLH, I like it $30 and under, guys. 29, 28, 27, as close as we can possibly get to the last line of defense down here, right at about the 26.65, 26.50 mark, right? So in the event CLH, same thing as ELF, this one usually can move a lot. If you find a minus 3, 4, 5% day, Monday or Tuesday, continuing this downtrend, I would not be opposed to buying some CLH through the form of writing some short puts down here, 28, 27, 26. The valuation down here is very, very, very decent for still a fast-growing company that's just been out of favor ever since, consumer discretionary spending has seen some significant pullbacks, and Pepsi has mentioned that as well. You also have weekly oversold conditions on this one. So I like this one. It's finding its bottoming out process. So we're going to try to pick the absolute lows on this one. In terms of the next one we're going to be looking at is Enphase. I like solar plays right now because of interest rates, right? So now they're getting that little bit of a bonus from the rate cuts. So the sector probably won't be as out of favor as it once was, especially last year. And this one as well has been crushed, right? I love Enphase, guys, at $100, around $100. So in the event on Monday or Tuesday, let's say we have a big drop on Enphase, the volatility is usually pretty good on this one. I would love to find it in the lower 100s, 104 down to $100. If I can find some good premium down there, I'll probably take this trade as well. Another bonus trade I'll be looking at, guys, is CVX. CVX, I talked about it in the yesterday's subscriber request video, but I like this one, guys. Warren Buffett owns a lot of this stock as well. Previous resistance is now going to be support for the company, has been support for the company at least for the past 2 years. So I like this one, guys, in the lower 140s, 140, mid 130s as well. In the event we get a little bit of a dip back here on CVX, this one is not very volatile. So you really need, some big momentum down like this right here. If I see some big momentum down leading into possible daily oversold conditions, I would love to take some short put options, guys. 140 all the way down to roughly 136 on CVX. I think it's a very easy trade for most people. 4.5% dividend as well in the event we get assigned. So that is a trade on CVX. Another one is going to be TLT. 20-year bonds. This is for the recession crew. For all of you who think that we're going into a deep form recession and you want to be protected, right? Well, no better protection than long-term bonds, right? They usually do very, very, very well as people flock to safety. So this one, I like it, guys, because TLT, of course, is now in a beautiful weekly uptrend. And look at this. It's done something recently in the past few weeks that it had not done, guys, in the past 3 years, and that is the moving average cross into bullish territory. So any small dips on TLT, I think will be good for this chart to just grind higher. We know that this one is a direct inverse relationship to 20-year yields. And yields, with all the rate cuts, will just be progressively moving down. But do not forget, guys, TLT is not NVIDIA, right? It will not do this. It's just going to be a slow grind higher. So I've been writing puts, guys, on TLT in the $98 range. I actually have some at 99 right now. I would not be opposed to be writing some 98.50, even where we are right now. 98, I think it's a great way to farm premium. And if you get assigned, at least you know you're holding an asset that is a very defensive play. So that is how I'm going to be playing TLT. I'm going to be playing some aggressive short puts, very tight, close to the strike price, because I do not mind owning this one. Whatever happens, guys, this chart is probably going to go up. Recession, no recession, doesn't matter. Yields are coming down, so this chart will gradually move up over time. Now, the last one I'll take you guys through is going to be Uber. So Uber, again, one of my favorite companies in the entire market right now, guys, just because of their dominant market share. The valuation as well is fairly good. I know they're slightly above where we did the valuation last time. They're sitting at about a 2 peg, but this is a company, guys, that is now net margin profitable. They weren't profitable for a very long time, and they are growing free cash flow. They are growing EPS in a substantial fashion, growing revenue in a very aggressive fashion as well. And they are the industry leader, right? Record profits, buybacks have started, record free cash flow. So I like this one, and I also like it because beautiful monthly uptrend, and now we're looking to maybe reset into another leg higher on Uber for this one. Beautiful weekly uptrend too. Where did we break out of, guys? We broke out of this area that we've been stuck in since June, right? So this is the breakout, retest, and possible run trade. So if Uber, for every which reason, continues dipping hard, I'll be looking maybe to write some short puts, $72, $71, $70, all the way down there. I would not be opposed to be doing that on Uber as well. Love this stock. And that is pretty much all of the bonus plays. There's a ton more, but those are just the ones that I wanted to bring to your attention. And that's pretty much all I had for you guys today. So if you enjoyed today's video, consider subscribing to the channel, consider liking the video if you appreciated the content. Also, consider subscribing to the channel if you're new. Would love to see you back. We do these videos every single Sunday in preparation of the week. And lastly, guys, if you have any questions about the strategy, about my stock selection, or anything at all, feel free to leave them down below in the comment section, and I'll get back to you usually in the next 24 hours. And lastly, if you want to trade with me live as part of the Discord, well, you can always click the link down below to join our Discord. Monday through Friday, we do live streams before the open, through the open, where I do a lot of these trades live, and you can ask me questions. Obviously, you get all of my trade alerts, not only for put options, but I also do long options as well, such as calls, call debit spreads, stuff like that, long share trades, long-term portfolio positions, a whole bunch of good stuff, guys. And we've been having a very good time in the Discord over the past month. And I'm pretty sure, well, I am sure all of our members have made a decent amount of money as well. So if you're interested, guys, the link is always going to be down below, and hopefully to see you there. That's it for me, guys. Have a very beautiful week of trading. I'll see you in our Monday through Friday daily market recaps. Take care and peace.